Hey, it's Tim from the iWIN team. We just had our monthly meeting, network meeting this past weekend, and one of the investors came up to me and told me a story, and it wasn't the greatest story in terms of what happened to them. So what happened was that they bought a pre-construction assignment sale, and they were looking to flip it. So what that is when a original buyer buys a pre-construction condo and they're trying to assign it before closing. What this investor did was buy that contract, meaning they bought that piece of paper to close on that property. So they bought it with the purpose and the only intention of actually flipping it, trying to sell it for a little bit more, which has worked well in the past. But obviously, you got to make sure that the numbers are there. What happened was that they were thinking of one number that they would sell for, but didn't sell for that number and sold roughly about 100 grand less. After everything, all their fees, it looks like they lost roughly just under six figures. And so that's a tough pill to swallow with that loss. And that got me thinking, what is there to do to prevent these bad deals from happening? So there's three things that you could possibly do. So the first thing is actually understand the market, understand your numbers, get all the data that you can. That's going to be the sales data in that area. It's going to be the days on the market in that area. It's going to be what things have been listing for and what things have actually sold for. So as more information that you know, the better decisions that you can make to kind of know if this is a good deal or a bad deal. And once you get that information, you can realize, for example, let's just make up some numbers here. If things are selling for $1 million and you want 1.1, is it likely that you're going to get that 1.1, for example? So if you know those numbers in advance, you can make better decisions on whether it's a good deal or not. The second thing is bounce that deal that you're thinking of jumping into off somebody else. So that could be bouncing it off a professional, that could be a realtor or a coach or something like that, and just asking if this is a good deal. They should know that market and they should be able to help you decide if this is how the numbers work and give you the options. You could ask a community like a Facebook group or a networking group, and reach out to some people there and say, hey, this deal came across my plate. Is this a good deal or bad deal? And they'll help you work out the numbers and stuff like that. It's essentially getting a third party opinion on that. If multiple people say it's not a good deal, maybe you need to rethink if that's going to be something that you want to jump into or not. The third thing is figure out what worst case scenario is, or other scenarios that will happen if you can't sell for what you want. So in this case, let's just say they wanted to sell for 1.1, and they decided that everything was there, that they could only get 1 million. Is it worth it? Do they want to move forward with that? If it is, fine. If not, what are the other cases that could happen? Could you be, if it was rented for X amount of dollars, does it cover the monthly expenses, the mortgage, the property tax, anything else in there? Does it cover? Are you okay with that? If you have multiple scenarios of what you can do with that property, then at least you have multiple exit strategies, not just hoping on one. And in a case like this, it was pure speculation, hoping that you bought the assignment sale, hoping that it would go up in value and that you could sell it for X amount of dollars, which didn't happen, obviously. So those are three quick tips to finding yourself a good deal and kind of vetting the bad deals out there. If you have any questions, just leave a comment below or reach out to the team. That's it for this week.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.